All right, folks, today we have the pleasure of having an American investor, author, and speculator, Don Durrett, on the show here today. He runs goldstockdata.com, been investing in the space, commodities for quite some time, in markets for quite some time. And Don, we just really appreciate you giving us the time here today. How are you doing, sir?
I'm doing great, Zach. Thanks for having me on.
Really looking forward to this one. Obviously, historical bull run for commodities underway. I think that we still have a long ways to go. And, selfishly, for my own interest, I'm just excited to pick your brain and get insights as I've started to look at the equity plays that are available for us in the commodity sector. I've already been stacking my silver, haven't stacked much gold yet, but I'm in the process of making my moves there. Our community focuses a lot on cryptocurrency and that end of the financial markets, but we've always hedged with that defensive measure, which it's been so funny to watch gold and silver actually outperform many of our cryptos and stocks, and it's done so well for us. And so, excited to get your insights. We'll talk macro, we're going to talk metal, commodities broadly, and then your expertise and insights and how we can find real winners. So, Don, just to get started, can you just give us your quick background and what you've been up to lately?
Yeah, so my background was IT. When I went to school, I was a computer programmer out of college. I did that full time for 5 years, and then I just started working in IT departments for about 20 years. So that's my background. But then I also had kind of a side gig where I've been writing books since 1990, and that's kind of my passion is the writing. That's the gold and silver stuff. That's like a hobby. That's like it's not really my passion per se. I actually feel like I'm doing the gold and silver just to waste time, if you will. I'm waiting for the writing stuff that I started doing in the early 1990s. Um, I'm waiting for that to come to fruition, if you will. Waiting, we're getting closer and closer for that outcome. And so got into gold and silver. I've been a gold bug since 1989, 1990. I go way, way back. The irony is that the reason I got into gold and silver is more relevant now than it was then. Being a gold bug in the 1990s, I was kind of the early bird because in the 1990s, gold was $250 pretty much the whole decade. And most people were, laughing at me when I said, what do you invest in? I buy gold mutual funds, gold miner mutual funds. They're like, what? Nobody understood why. And now people are starting to understand why, because you can't print prosperity, which is what the US has been trying to do. We've seen it historically, countries do this over and over again. Um, you know, they do what's politically possible, and they don't do the right thing. And so fundamentally, it's just a matter of time before it catches up to you. Now, I was way, way ahead of the curve, but it's given me a lot of time to collect stocks. I'm more of a collector of stocks than an investor. I consider this a one-time trade. I plan to sell all of my mining stocks, 100% of them, all of them, during this bull market,
Mhm.
because I consider it a trade. But the irony of ironies is that this kind of dovetails in with all my writing. When this happens, when this bull market begins, well, it began kind of like August of this year, I believe. But when this bull market in gold and silver mining, when it culminates, if you will, this is bad. This is basically, I've been saying this, I've called it 2026, the end of America. This is the last year of American greatness. We've been building to this for 30 years. It was always going to happen. It was always a fait accompli. Just people are in denial, and people, they're not connecting the dots. They don't see what's happening. Some people do. A small group of us kind of see what's coming, but the vast, vast majority do not think that the status quo is currently in place. It's going to maintain that their life is going to look like their life in the next 5 years, the next 10 years is going to look like it does today. It's not. And so that's why I'm in gold and silver. People that are in gold and silver, we're kind of in it for the wrong reasons. Um, we're not really investing. We're hedging against kind of an eventuality that we're pretty confident that's the only eventuality that's going to happen. And now more and more people are starting to see that. I mean, you don't buy gold because you're optimist. You buy gold because you're a pessimist, and most people don't like that. They want to be. You're forced to buy gold, more or less. It's like the only choice. It's not a good thing. But we've seen America. America's dying before. If you just pay attention, America's dying, and it's been dying for a long time. And I pretty much knew, the writing was on the wall. It started in the 1960s, when we killed Kennedy, both the Kennedys, and it was like, at that point in time, America, kind of went in the wrong direction, and it's been going in the wrong direction ever since. And there's really no path back. I mean, now it's becoming obvious that there's no path back.
Yeah.
I've known it for a long time, and now it's starting to become obvious to the average person.
Hmm.
But I got into gold and silver because I believed 100%, not 99, 100% that the US government would default on its debt in my lifetime. In other words, I'm not going to have to wait. I'm going to experience it, right? And so if I'm going to experience that default, and they're not going to default. They're going to reset. But when they reset, if you own debt, you're not getting paid back 100%. So it's basically a quasi default. It's coming, and every day that we go forward, it's becoming more obvious. Next year it'll be more obvious, right? It's becoming more and more obvious. But that's why I'm in gold and silver. I always say you shouldn't own gold and silver mining stocks unless you believe that basically the US government's insolvent. That's the
Okay.
driver of gold,
Hmm.
is the US government's balance sheet. It's a total mess. So it's like World Bank's, um, foreign governments are buying gold because they're worried about the US government, the US economy, US bond market, US treasuries. That's the only reason gold's going higher, the only one.
Hmm. Hmm. Yeah, Don, I appreciate this. This is going to be a great conversation. And if you guys haven't figured out, what I like to do here as a young guy is go get some wisdom, some experience from these guys who've been around through a few cycles, right? And you've seen the macro. I think the only problem that we find ourselves in sometimes when, for those of us that do see the macro, do see what's coming, is you can be a little bit early. But I'd rather be a little bit early than miss this by a minute because as we've already seen, I mean, I thought gold was expensive at 2,000 bucks per ounce just a couple years ago when I first started stacking my silver. And I thought that, silver going to 30, 40, 50 bucks was going to be fun. And here we go. We shot up to 5,000 per ounce gold,
Right.
$100 per ounce silver. And I think that we're going to break down in today's update why this is not even close to being finished. I want to give you a little bit of hope, Don. I am doing my part. Okay. We're about to have our third child. I try to remain optimistic, but just like you, I started stacking my silver. I call it blackout barter, right? The physical silver that I keep allows me to transact if the systems go down. On the other side of my portfolio, when I do want to take risk, of course, I've gone into digital assets, but what we're looking to do is become financially free and stack hard assets by doing so. And that includes maybe making some crypto trades back into real estate, back into gold, back into hard assets. And I'm excited because for me, bringing the commodities, into a tokenized form has the potential, I think, to make it more efficient and more liquid. And for me, that's been my thesis behind why I'm not overly excited about Bitcoin, because as soon as you tokenize gold, you basically take away the one advantage that Bitcoin had, which was a little bit more transportability, right? And so I'm interested to get your thoughts on crypto as well too. Clearly, you get the macro, and so we want to get all of your insights here in this update. Can you just run us through what's the main difference that you're seeing between this bull run and the commodity cycles of 2011 and 1980?
Yeah, the big difference is we are at the end, we're basically at the end game now of the debt bubble. So back in 1980, that was, the debt bubble didn't even exist yet. What we had there was, it was the end of mercantilism for the US. So from 1945 to 1970, we were a mercantilist economy. We were generating wealth by building stuff. and that stopped in the 1970s. So that commodities bull market, in many respects, was kind of inflation had a huge impact on it because we had high inflation there. But it really isn't relevant today at all because we were still we didn't have a debt problem yet. In 1980, when Reagan came into office, we had less than $1 trillion in debt. We did not have a debt problem. And that's the reason why we could take interest rates up to 18%, because interest didn't matter. We could afford the interest payments. So that one's kind of out of the picture. That one doesn't resonate at all with today. But then the next one starts to resonate a little bit. But the difference in the last one, the last bubble, 2009 to 2011, when gold took off, the difference then was we didn't have inflation. So since we didn't have inflation at that point, we did have a debt problem, absolutely had a debt problem, but we didn't have an inflation problem. So that allowed the Fed to print whatever they wanted to. So that recession lasted like less than a year. In June of 2009, it was over. And they took interest rates down to zero. Zero. The same thing Japan did. They basically emulated Japan. And then they started manipulating the economy. So both of those really do not, you can't really use them per se versus what's happening now. For instance, both of those, gold went down in 1981, 82, and then gold went down in 2012 and 2013. And the reason why gold went down is because we entered a new business cycle. We started growing. And gold and the economy are opposites. They don't trade. They're not supposed to trade together. Gold is supposed to be a hedge against uncertainty, and people buy it when there's a lot of uncertainty, right? 1979, 80, 29. From 2002, gold was at $250, and then it went to $1,935, basically 8x, because of all those issues we had. The dot-com bubble burst in January of 2000. 9/11 was September 2001, and then we had the great financial crisis in 2008. So we had three crises there. Same thing as the 1970s, where we had two energy crises, and we had a massive inflation crisis, and we had a recession crisis. So it's basically the same thing. So uncertainty made gold go up, right? Now, what the hell is gold doing at an all-time high when the so-called economy is strong? So this is a whole new animal, a whole new environment. But I saw it coming. I mean, I've started collecting stocks in 2004. I have about 160 stocks. I just collect them. And I collect them because I know they're going to be worth more money. Because eventually the winner is going to be gold. Eventually, you can only kick the can so far. And now they came up with this so-called idea of modern monetary theory, which means debt doesn't matter. Debt's irrelevant. You can ignore it. The whole Dick Cheney things, deficits don't matter.
Right.
Well, guess what? They do matter if your customer goes away. The customer of our debt is foreigners. We export debt. That's what America exports. We export debt. We cannot self-finance $2 trillion a year. Not only do we have the deficit $2 trillion, but Janet Yellen started rolling over the debt using short-term debt. Right. So all the rollover debt was like within 1 year or less, 3 months, 6 months, 1 year, right? So that debt comes due every year. We have to roll it over. So last year we had to borrow something like $9 or $10 trillion to roll over the debt and then pay the $2 trillion. Guess what? This year we have to do the same thing. We can't do that without foreign help. So if the creditor, this is where you start to get to the end game. And this is where you go back and look at history. So the last global power was England. And after World War I, they basically lost their mojo after World War I. And then once World War II ended, England was completely lost their mojo, right? And so the US took over. But basically the British pound and England were the world power prior to World War I, the so-called British Empire, right? And that went away, and then the US came in. These empires, they don't last forever. They come to an end. And you have to maintain, in order to be the global reserve currency, you have to earn it. If you don't, you have to earn it, you have to hold it, right? Britain couldn't hold it. They lost it. Well, that's what's happening to the US. The US is slowly losing it. We maintain that status of the reserve currency in two ways. But the main way we maintain it is our economy. So our economy is right now about 23-24% of global GDP. It's big enough, if you will, to have that global reserve currency. However, countries now, because we've been since 2020, this was always going to happen. The debt got to a certain extent. But once inflation kicked in 2020, we started exporting inflation, right? If we have inflation, we're going to export inflation. So you print all that money. And as you export inflation, people that are currently holding your bonds, those bonds are worth less money. And like, what the hell, man? And then they start selling those bonds and they don't want to buy your new bonds. China, since 2013, has been a net seller of bonds. 2013, over 10 years. In 2013, they had $1.5 trillion of our bonds. Today, it's under 700 billion. So they've sold more than half in 10 years, and it's slowly going down. They're net sellers, and that's the reason why, is because they basically, after 2008, once we started manipulating our currency, China's going, this country, they're not going to be at the top of the mountain for very much longer. They were way ahead of the curve. Right. But now we're getting closer and closer to that end point where, again, the economy I said there was two things, right? The first one was the economy has to support it. But the second thing that has to support it is the dollar has to be strong, and the debt, the bonds, the U.S. Treasury bonds, both of those have to be solvent, if you will.
Right.
Because once they start to weaken, people are like, I don't want this junk, right? You can have it, right? Right. And so all three of those they didn't have weakness in 2008. The dollar was strong. In 2008, the dollar was strong. Our debt market was strong. Our economy, weak, but we got back on our feet in 2009. Mm-hmm. So the Federal Reserve had the ability to fix things. Now, the Fed no longer has the ability to fix things. They cannot print at will. If they print at will, they'll create more inflation. They can't. They know that. So they can't print at will. We have an inflation problem. They haven't been able to fix that genie, right? That one's out of the bottle. They can't fix it. And then, people aren't buying our debt. We're losing our customers. So it's like a night and day difference between 2008, 1980, and today. We are entering kind of and Ray Dalio, he's been trying to tell people, but nobody wants to listen to him. He basically says that we were on the verge of a new monetary order. Mm-hmm. Basically, if that happens, remember what happened to England when the U.S. took over, right? When England lost their dominance, they basically got rug pulled, right? And they haven't really recovered. I mean, as far as we watched that country slowly deteriorate. And that's what's but I think it's going to be even worse for us. And like I said, I think this is the last year of American greatness. Now, American greatness was basically dominating the world, mm-hmm. Basically across the board. Now I think we're going to wake up, in 2027, and we're going to realize, we're not going back there. But the key thing here, the key to it all is the bond market, mm-hmm. because the bond market, it literally prints our standard of living. In other words, that $2 trillion. Remember, if they tried to use Doge to basically let's see if Doge can cut the deficit or whatever. It basically didn't work, right? They kind of threw the towel in because it couldn't get it down to where it had an impact. And the big, beautiful bill, $2 trillion, they didn't even try to cut it. So we can't cut spending. So the bond market has to print what is needed. And what is needed right now is massive amounts of money. And so the moment that the bond market becomes fragile, where it can no longer print what's necessary, that's game over. And so the way that it's going to unfold is the Treasury Department so there'll basically be every year, usually it starts in like June, they have to start negotiating the next budget. The budget starts October 1st. So they start negotiating it usually about June. And they're going to go in there and they're going to start negotiating. And and the negotiations are basically going to be same old, right? $2 trillion deficit. And the Treasury Department is going to go over there and go knock on the door and say, hey, guys, I hate to give you the bad news, but we can't borrow 2 trillion this year. You're going to have to cut, $400 billion. And that will be the beginning of the end.
Um,
Once we can't borrow what we need, it's over.
yeah, and on the other side of this too, they're selling our debt and they're buying gold, right? And this has been the historical run that we've seen and why we're talking about it has so much more to go as well. I think the question then is, well, you pointed out that the most important chart is the S&P 500 the other day. I wanted you to break that down, and I also wanted to ask you, what can Trump and Treasury Secretary Bessent do to save our bond market, to drive those rates down like they keep on trying to get from Jerome Powell and the Fed? They're not budging. But at the same time here, I mean, we have Iran strikes on the table. We have the Supreme Court that's ready to rule on Trump tariffs. That could be another catalyst. And then I also would like to just mention too that you have the files, I'll call them, right? Some things that are being exposed right now that implicate some of the top guys and gals in the world of politics and finance and business. So we have three catalysts that could break our market, but what we've seen up until now is an S&P 500 at 7,000, Dow at 50,000, and the naysayers would tell you that we're still growing the economy. So your response to that, Don, and what options do they have at this point?
The S&P is absolutely the most important chart because S&P is our largest 500 companies. And so we haven't gotten to 7,000 this year, but we started the year at 68 something. So the stock market has not been able to make a surge. So we're 6 weeks in and the stock market has not been able to make a surge. And we've lost leadership. Microsoft and Nvidia are off their highs. And the Mag 7 are way off their highs. The Mag 7 is down for the year.
Right.
And so we lost our leadership, and the S&P is having trouble getting above 7,000. I thought it would have a bit of a surge above 7,000. I thought it would get to 7,200. I didn't think it would get to 7,500, but now it's having trouble getting above 7,000. It's running out of time. And I think that what's going to happen here is that you're going to get a bit of a correction I think in March or April. So seasonality. So usually seasonality, Januaries are pretty strong. You come out of the gate pretty strong. It's pretty unusual to have a significant correction in January. They usually don't happen. And then February usually gets that kind of that momentum out of January. So January is usually a pretty fairly strong month, and you get a little momo out of January. And that's kind of what's happened. We've pretty much stayed at 6,800 to 7,000 for 6 weeks.
Mm-hmm.
Very, very little volatility. I don't think that volatility is going to maintain in March and April because usually you go out of the gate fairly strong and then you go to March and they call it the Ides of March, right? So March is kind of that first month where the market starts to look around and see, do we have enough momentum to get to the end, the rest of the year? And then so March and April is usually somewhat volatile months. So I'm expecting a 3 to 5% correction in those months. And when it happens, now we're going to see, basically what's going to happen is the stock market is going to get knocked in the face, right? And then we're going to see if it gets off, gets up off the mat and then can get back above 7,000. I don't think it's going to. I think what's going to happen is you're going to get stuck in a trading range and people are going to start to get flustered. Because if you get stuck in a trading range and there's no leadership, in other words, Microsoft and Nvidia aren't coming back, right? They're not. They're stuck. They're like, oh, you let somebody else lead. Let somebody else, right? Yeah. If those two guys can't get off the mat, who's going to lead here? It's and then software's having a lot of problems because of AI.
Is this the rotation into small caps now? I mean, we've seen the Russell 2000.
No, how do you have a rotation into small caps when the economy's weak? You have a rotation into small caps when the economy's strong, right? But these companies, they're not doing well. Many of these companies that are like the Russell bouncing, most of those companies were bouncing off lows because the Russell was absolutely beat up last year, right? It's not as if people are going to these stocks because the companies are doing well. That's not true. They're going into them because they've been beat up. But no, you're not going to get rotation. You need leadership, but you need strength. The housing market is a mess right now. And they make two cuts. So what? That's not going to help the housing market. The auto industry is having trouble because of the tariffs. Cars are more expensive now. And so small business, restaurants, travel, there really isn't any. This really feels like a recessionary economy. In other words, we're having trouble here restarting things. So if you get into, like I say, a trading range and you have no growth and you can't get off the mat, at that point, that's when things can get ugly, because that's when companies can go, okay, I'm going to have to lay off some people here because I don't have any growth. And that's usually what happens. That's how you get a recession, is it feeds on itself. It feeds downward. In other words, you kind of cross the Rubicon and used to go down. There's no path forward. Before you ask me the next question, I've been writing down these questions that you wanted to get to.
Yeah.
And so I wanted to mention, we're talking a little bit about the S&P 500 and getting stuck at 7,600. I guess we kind of beat that one up. I think I can ignore that one. The
But how
Supreme,
does that tie back to gold?
okay, yeah,
Yeah.
perfect.
Yeah.
So what's going to happen is initially, and they've been tied at the hip here. I mean, unbelievably, the correlation is kind of mind blowing, because they're not supposed to be this correlated. They're not. Normally, they're supposed to be cats and dogs. The stock market is supposed to do well when the economy is well, and gold is supposed to do poorly when the economy is well. So something's weird going on here, right? Why the correlation? Why is the very, very strong correlation? The stock market went down 1% on Thursday. 1%, it just went down 1%. Gold went down 2.7%. And silver went down, I think, 10%, 9%, 9%. It was
Close to.
crazy. And then today, the stock market's up, gold and silver up big. I mean, it's like gold and silver are like following, they've been correlated since February 24. It's kind of insane. And I think that correlation will stay intact until you get a decoupling. So what is the decoupling event? That's what we're waiting for. And we don't know how far down gold will go before it will decouple and turn around and go up. But what we do know is history. 2002. So in 2001, 2002, gold was basically, it was kind of really cheap at $250, so it couldn't really get pounded down. But the stock market went down and gold went up. They decoupled. And when they decoupled, that was the fear trade. It was a fear of owning the S&P 500. I'm not going to own those stocks. Have fun. I'm not going to own the stocks. You're not going to make any money in stocks. The stock market's dead. That's the fear trade. I'm not touching them. And when that happens, gold will be, that's the pivot. It's like, okay, I'm not going to own stocks. What do I want to own? I want something that's safe. Well, guess what's safe? Gold is safe. Let me buy some of that. And so that's when you get the decoupling. So what is the floor for gold? When does it bounce? How low does it go? I think 4,500 to 4,700 is a good range. And silver, say 60 to 65. Somewhere in there, that's where your bounce. But the one thing that the key here is, how long does it take to get to those levels, and how long does it take to bounce? If gold bounces within, 4 to 6 weeks, something in there, the miners won't get beat up that bad, because investors will recognize that this decoupling, once they'll anticipate the decoupling, and then once the decoupling begins, they'll be buying the heck out of these stocks. And they're already cheap. It's somewhat analogous to 2002, where the gold was cheap. Right now, the miners are cheap.
Yeah.
If you look at the multiples, they're cheap. And so they're not going to get beat up that bad. You're not going to get an opportunity, for instance, to buy Newmont below $100. I don't believe that would be like a 20% correction. I don't think you're going to get that opportunity. And so people that are on the sidelines waiting, I'm going to wait till Newmont gets to 80. I don't think you're going to get it there. And then once it turns, once it decouples, it'll take off. So basically, it's hard to time. I mean, if you're on the sidelines now, okay, I'm just going to wait. I'm just going to wait for this next correction that Don's talking about. There's always a possibility. There's always that possibility. It's kind of an outlier that gold and silver could just rocket higher. and basically never look back. And then you're going to be chasing it. Michael Oliver. One final thing, Michael Oliver. He thinks that we're going to get above $200 here in the near term future, and possibly higher than that. You get silver above $200, and you miss the train. You better be you better be on the train if silver goes to 200, because the floor just went way up. I'm talking floor 60 to 65. But if we go to 200 before then, the floor goes all the way to $100. Then you get a 50% correction, you go back to 100, but you might not even go back to 100. You might only go back to 120, 130, 140. That might be the new floor. So it's tricky. It's really tricky if you're not playing it. But the S&P's key, the decoupling's key, and it's all coming.
Yeah, yeah. And so you're saying that gold's not even gonna get close to 4,000 on the floor price or the correction. You're saying that silver not gonna break below 60. We're not getting below that previous all-time high of $50 silver again. In your mind, those floors are gonna hold.
Yeah, that's my expectation. We're in a bull market.
Yeah.
In a bull market, you generally don't get those brutal sell-offs. I mean, we're definitely in a bull market in gold and silver. And this is a bull market that has legs. This is not a bull market. This is a bull market that's early still.
Yeah. Yeah.
I think that gold is going north of $7,000.
Wow.
If your target is below 7,000, you're too low, I think. I think 6,000 is easy. I mean, we're at 5,000 already.
Mm.
6,000 is like right around the corner, and then you're looking at seven. So I think seven is a very achievable target. And so if those are the targets, then the chance of going much below 4,500 is pretty low.
Right. And then for silver, we could easily be up at 150. That's a conservative target, though, I bet from you, huh?
No, not so much.
No, okay.
I'm not in the $500 silver camp. I'm in the 7, 8 gold camp. Gold doesn't really have anything to hold it back, if you will. Gold is, it's basically a monetary metal, and without counterparty risk, with really difficulty for anybody to control the price.
Yeah.
Whereas silver is a unique animal that's very risky. You cannot treat silver like you treat gold. So, like for me, I'm confident gold's just going to trend to 7,000, easy peasy, nothing, no problem there. Silver is a whole different animal, and the reason why is because it's a strategic metal. It has inventory issues, and the government is going to do something.
Yeah.
So the government has a lot of tools it can use to kind of control the silver price.
Mhm.
So I'm in the I think my target is 150 to 200, maybe 250, but above that, I think it gets dicey because I think the government's going to step in, and I don't know exactly what they're going to do. But this bull market is not going to be. I don't think it's going to have something that's going to have legs, if you will, much more than I think we're probably pretty good for like 18 to 24 months. But after that, you could get a reset, and when you get a reset, at that point, gold and silver could kind of lose their mojo depending on how they do the reset. The reason why gold and silver are doing great right now is because we're anticipating a reset, the uncertainty. But
Right.
if you remove the uncertainty, gold and silver could flatten out real fast.
Yeah.
And
Yeah.
so if you're in silver, so here's the problem with silver. If you think, oh, this is a beautiful trade, we're just going to ride this thing to $500, they could beat up silver significantly, which would cause a delay on how long it takes silver to get back up to $200.
Mhm.
And then that delay, we don't know how long it's going to take them. In other words, they could flood the market with inventory. And we don't know how long it would take for that inventory to get used up for those prices to rebound. These are unknowns. For instance, the ETFs have 1 billion ounces of silver. They could release all of that on the market tomorrow if they wanted to. 3 ETFs hold 1 billion ounces. 3. And so they could basically say, okay, all 3 of you guys, the US government is going to buy all that silver from you, and we're going to give the money back to the shareholders. And then we're going to sell all this inventory to all the people that need it. We're going to create this inventory and we're going to price it at $50 an ounce. And we're gonna sell all this silver. And they basically just set the price at $50 until they're out of silver, something like that.
You're
So
talking about a silver buyback.
of the ETFs,
Yeah,
yes.
yeah, yeah,
Yeah, the US government, they would
yeah.
basically just say, we're going to take ownership of all this ETFs. We're going to buy it all, and we're going to take that cash and give it all to the shareholders. We're going to give you your money back at a lower price, by the way. And then we're going to be sitting on 1 billion ounces, and we're going to sell that to all these fabricators that need it and defense contractors,
Mhm.
and we're going to create inventory. That's the low-hanging fruit that's very easily done. Now, they don't want to do that because, first of all, they're going to basically rug pull all the people that have options. Like if you have options on SLV, those are all going to go bye-bye if they basically, because they would basically shut it down. Once they shut it down, that's the problem with it. So they might not do that because of they're basically, like I said, they're going to rug pull all your option holders. Plus, they're going to rug pull the shareholders because the price of silver is going to drop when they do that,
Right.
and then they're going to give you your shares back at a lower price. So they're going to be breaking the rules in a couple of ways. That's one thing that could happen, though. It's something to be cognizant of. But there's lots of things they can do. That's just one to create inventory. And I think there's going to be an inventory shortage. So you can't think of silver and gold in the same sentence. They're completely different animals as far as risk reward goes.
Now, I wanted to ask you about the silver shortage, squeeze, supply issues. We're seeing, online shops just completely shut down. The spreads that we're seeing are starting to get a little elevated there. We're hearing refineries are, basically not taking any more supply. There's some interesting things happening. What are you hearing and seeing yourself?
So I wrote my book, How to Invest in Gold and Silver, 2012, maybe 2010. I think I wrote the book before, yeah, 2010, before I did my website. The website was 2012. So I think the first edition was 2010. When I wrote that first edition, I said, we're going to have a shortage in silver. It's going to happen. And the reason why is because 70% 80% of silver, back then it was 80%, now it's 70% of silver is needed by fabricators. And it's about, and so you got 1 billion ounces of silver inventory. You got about 700 million, 800 million, excuse me, 800 million that are mined every year, another 200 million in recycling. So supply is 1 billion ounces. And 70% of that, 700 million, is needed by the fabricators. Well, what about the investors? If the investors want some, they got to go find it from above ground stocks. Once you go above that 30%. And so the last 4 years, we've had these massive deficits, like 600 million ounces over 400 years, 600 million ounces. And that's all come from above ground stocks. Those above ground stocks are just whittling away.
How,
So it's
how much do you trust those numbers from the Silver Institute? I just wanted to check that.
I don't. I think we're already in shortage, is my guess, because these inventories, where they actually keep them, I do not think they're transparent. I mean, most of them are controlled by the big Wall Street banks. I mean, these are banks that have paid big fines in the past. So I have my doubts that they have all that they say they have. So I think we already are kind of in an inventory deficit already, is my expectation. Well, we're close. I think it looks like, basically we have inventory problems at all three sites. Yeah, the first place was the LBMA. They were the first place that had inventory problems. They're supposed to have like a 2-day turnaround for when you buy silver there. And they basically said we don't have enough trucks. Do you remember that? We
Hmm.
don't have enough were total BS. And it went to like 1 month, and then it went like to 3 months. They were the first place to have inventory problems. Then Shanghai, just this week, they're no longer allowing retail investors to take delivery on their futures exchange. So if you want delivery, you got to go to the Shanghai Gold Exchange. But the futures exchange, you can't take delivery unless you're a corporation, but investors can't. So they're having problems. And the COMEX probably has the worst of it. In January, They had $49 million, excuse me, 49 million ounces delivered. And it was something like over 70% of the contracts were delivered, something like that, which is unheard of. And then in February, they've had like 13 million delivered and 98% of them were delivered. 98%. And now we're going into March and they're eligible, or they're registered, excuse me. They're registered as about 100 million ounces. And if 27% take delivery, they'll use up all 100 million ounces. That's only 27%. And there's another 350 million, I think, ineligible. But how many of those eligible really want to convert over to registered? So we got an inventory problem. It's going to blow up. It's going to cause a problem. Puts a bit of a floor under the silver price. But there's always going to be, there was always going to be this problem with silver. We're seeing crazy volatility in silver, right? A 9% drop in one day. Today it's up, it didn't bounce all the way back. It was up $2. I mean, it really didn't bounce that much. Gold was up $109. It's Friday the 13th. It was up 109. Gold's been going plus and minus $200, plus and minus $100, very, very often now, when previously you never saw this. So they're both volatile. Both gold and silver are both volatile. It's going to continue. I think these are the signals that we're close to the end. These are definitely the signals that we're close to the end. Like I said, I think this is the year that it all kind of goes wacky. Now, I said before that the last two gold bull markets, they both ended in a new business cycle. 1981, 2012. Both of those ended in new business cycles where we had growth. I don't see that on the horizon here. Mm-hmm. So if that's not coming, if we're not getting this new business cycle, then something's going to break. And the more obvious it gets that something's going to break, if you will, that actually is really good for gold, because that just means uncertainty is increasing. And I think that is the story here, that uncertainty is actually increasing, not decreasing. Yeah. There was a story out of Russia this week that I was shocked. I don't know how true it is, but it said that Putin approached Trump and wanted to negotiate basically them back using the dollar.
Right.
That's fascinating, but I don't think it really stops what China wants to do. China wants to move away from the dollar, but it's definitely interesting development.
Yeah, I was going to ask your thoughts on that, but before we get off of gold and silver and how to play these, for myself, I've stacked up my silver and I don't really have plans to sell it, but I was considering rotating from silver into gold. Do you think that is the play for folks like myself down the road here, as silver, has probably got some more to run, but like you said, that volatility and what they could do to kind of bring it back, and really beat up silver, is that something that folks should be taking a look at? Maybe the silver back into gold play? What do you think?
Yes, especially when silver gets to 200, because once it gets to 200, your GSR is going to be down to, the 30s. So you kind of lost that silver outperforming gold situation. So, and then gold is a much more kind of a secure metal. So if you have no tax consequences, I think swapping at 200 makes a lot of sense. Mm-hmm. And so the other thing is, but I'm with you though. I want to hold some of that junk silver, some dimes and quarters and $50 for sure. But, you might want to hold on to some of those bars, but swapping to gold, I think around 200 actually, makes a lot of sense. I might do it, but I don't like the tax. It's 28% tax. I don't really like the tax implications. Mm-hmm. That's kind of ugly. But I actually think that we're heading to a period where gold and silver won't be taxable.
Right.
So
right.
You want to hold on to if you're worried about your taxation, just hold on to it at a certain point. I don't think it will be taxable. But I think now is kind of a good time to talk a little bit about crypto.
Yeah.
Because most people believe that, Bitcoin, is dead here. But I started in Bitcoin in 2016, and from the very early on, I recognized that this isn't really a story about Bitcoin. This is a story about blockchain.
Mhm.
Because blockchain technology, and that's when Ethereum came out, and Ethereum came out with a smart contract. Because the smart contract is very powerful, very potent. It can do things. The thing that's beautiful about it is it's outside the banking system. So you basically have private banking through smart contracts. Now, that only works if it integrates with the banking system. So there's rails into the banking system. But I think that stable coins are basically the gateway drug, or if you will, or the wolf that lets the hen into the hen house
Mhm.
that allows both DeFi to thrive and Bitcoin to thrive.
Mhm. Mhm.
And so basically, stable coins, and it's really interesting because Trump is pushing these stable coins because, and JP Morgan's talking about creating their own stable coin. So once all you need is one stable coin. So like Circle is probably the one that might be adopted the most in the US,
Mhm.
but it could be another one. But once you have a stable coin that's it's basically convertible, fully convertible in the banking system. So you have rails into the banking system. Once that happens, it opens up unbelievable opportunity for all these projects. Because I'll give you an example. So let's say that's the case. That basically, if you have Circle, let's say you have a Circle wallet on your phone, and you have like a wallet, say you have $10,000 in Circle on your phone, and it's in your wallet, your digital wallet on your phone. And then let's say your bank will allow you to transfer that Circle to their bank, and then they'll convert it to cash. They're basically an exchange. They're basically, okay, now you hold cash, we'll convert it. The second that happens, now that might not ever happen, if you will, it might not ever happen, but if it ever does, at that point, the scenarios go absolutely bonkers because so now it's on basically crypto is integrated into the financial system. Now that might not happen in the United States, it might happen in a foreign country. Okay, so at that point, DeFi suddenly becomes usable.
Mhm.
So say that let's say that you have some Bitcoin and you want to buy a car, but you don't want to spend your Bitcoin, but you don't want to go to a bank to get a loan. So you go in there and they take crypto as collateral. So you can basically go, okay, I want to buy this car, and they go and they basically get a price and you say, okay, I want to buy it, using crypto as collateral, and I'll make payments. And they're like, fine. Uh, what do you want to use as collateral? And you basically say, I'm going to use Bitcoin. Now, at that point, the company's like, it's basically a loan to value situation. So let's say, Bitcoin today is at, I don't know, 68,000, but let's say you have two Bitcoins, so, 140,000, and the car loan's 50,000. As long as the Bitcoin stays above 1.5 loan to value, you're golden. The second it drops below that and it's 24/7, you basically get a margin call. And they basically say, look, you got 48 hours to 24 hours to basically cover that, get above 1.5 loan to margin, or else we're going to sell some of your Bitcoin, right? And then if the bank has to foreclose on your loan and sell your Bitcoin, what they do is they convert it to the Circle. They convert it to Circle, send it to their bank, convert it to cash. So the Bitcoin, the bank won't basically take Bitcoin. We're not gonna be a Bitcoin, but we will take your stable coins. Give us your stable
Mhm.
coins, right?
Right.
So once stable coins get on the rails, it opens up opportunity all over the place. I now crypto might fail, crypto might not go anywhere. But if you look at the possibilities are pretty huge.
Right.
If the key here is they got to get inside the banking system, and that's what Trump's trying to do. They get into the banking system, then look out. And they're symbiotic, I think. So if if stable coins are here and DeFi's here, then that's going to create a foundation for Bitcoin to exist. And so they're very symbiotic, I believe. And so people that ignore crypto, um, I like it because I'm a speculator in gold and silver miners.
Hmm.
And I see it as something that has a lot of alpha potential. I've done well in crypto actually
Yeah.
because
Yeah.
of the alpha potential, but I see it as something that has a potential future. But the one final thing, the reason why I brought it up is because I think it ties in to this idea that gold is the perennial place to store your money, to save your money as a store of value. That is true today, absolutely true today. And I think it will be true for the rest of this decade. But when we go into the next decade, I think it's a whole new can of worms.
Hmm.
I think we get a new financial system. I think in many respects, I think it'll be crypto based. And at a certain point, because you could have digital gold backed tokens, right? So gold is kind of alive there. But physical gold as an asset, it might flatten out. It might lose its mojo next decade, is my point. Gold has been a beautiful asset for 20, 30 years. Absolutely. But I think next decade, I don't think you can count on it 100% for being what it's been in the past. Don't expect the future to look a lot like the past. I think that's my point. Be
Yeah.
open-minded.
Yeah, yeah, absolutely. And for me, I'm a younger guy. I'm 31 years old, and so most of what I've invested is in the digital asset space, and we've done incredibly well in the digital assets. And for me, it's been hedging my very risky side of my portfolio with mostly crypto, with the defensive measures of silver, and that balance for me has worked really well because they've both been having an incredible bull run after the Trump election. Most of my cryptos in XRP that did really well. And then silver's also stood out in its own right. I'm fascinated that you are, here in the digital asset space investing in that you've been in it for quite some time. For me, I think there's an incredible opportunity for both communities, to work together. Incredible value unlock, right? Because we've always been focused on the real utility, not just the speculation. I mean, my channel is not for picking the next meme coin. It's about finding the new rails that are going to run the new system, like you're talking about, not a get rich quick scheme, but build, own a piece of the railroad for the
Right.
next decade. And so I'm curious where you're at. You brought up Circle. I'm heavy into XRP and Ripple, the main company that's building in the XRP ledger and that ecosystem. They're actually now have a stablecoin RLUSD, which they have completely backed 1-to-1. They've been growing that and playing catch up, trying to catch up to Circle and Tether. But they're in the process. They actually got conditional approval or partial conditional approval for their OCC bank charter. So they are one step away. They're basically halfway there to being fully tied into the banking system, like you mentioned. And so I think that we are there. I'm curious, where are you at in the crypto space and which projects stand out to you?
Yeah, so I like the L1s.
Yep.
And so people are like, what are L1s? And so the L1 is what you build on. So basically Ethereum. And so so Ethereum isn't a transactional currency. It can be used, but it really isn't. It's more of a development platform. And
Right.
so whoever controls the largest development platforms, you're basically talking about the Microsofts of the future. So I like, those are the ones that I like. So Ethereum and Solana, those are my two favorite in this category. The other one is HBAR,
Hmm.
and then Cardano, Avalanche, and then a new one that I'm going to buy is Sui.
Okay.
And so I'm basically trying to find the top two L1s.
Hmm.
What are going to be the top, whatever the top two ones right now? Ethereum has a huge lead, and I don't think Ethereum's going to lose it. It's just dominating right now. The L1 platform. Solana's trying to get there, but it's having a hard time keeping up. There really isn't a number two right now, but I want to own the top two. So I'm all about the L1s. I don't really do the niches. And
Hmm.
then
Yep.
and then Bitcoin. I actually want to sell some of my. I have never sold any Bitcoin, but I actually want to sell half of my Bitcoin, um, but not now. It's still too early. But my problem with Bitcoin is that it has kind of two weaknesses that I don't really like. Whereas, these L1s, they're software programs. It's software. Whereas Bitcoin's, in my opinion, is basically it's a collectible and it's trying to accomplish something that maybe it can't accomplish, which is it wants to be kind of a global foundational thing, like basically used as collateral, and it might work, but it's definitely not a slam dunk in that regard. And the other problem I have with it is that it constantly needs new investors. And so at a certain point, I think that Bitcoin could have trouble growing above a certain point. I don't know what that point is, but I think it's going to be north of 500,000.
Mm.
So 500, 600, 700, 800, somewhere in there. At a certain point, people are like, I'm going to start selling my Bitcoin. Like right now, most people are hodlers. They don't sell it. But at a certain point, I think people will. You have quantum computing. It's a bit of a risk. But the other thing is a bit of a risk is the governance model. I was very disappointed in what Core recently did with the Taproot situation. Taproot allowed people to put data on the Bitcoin blockchain and basically changed what Bitcoin was all about. Bitcoin was supposed to be a transactional currency, period. And now you can use it for transactional currency. You can also use it as a database. And it became a database on accident. This is the thing that really upsets me, is that Taproot was not planned as a mechanism for holding data. That wasn't what Taproot was built for. But after it got deployed, some developer figured out a way to use Taproot to store data on the bit up to 4 megabytes per transaction.
Yeah.
And I'm like, that's not what Bitcoin is. Turn that off. Stop that. And instead of reversing it, the core team said, no, we're going to allow that.
Mm-hmm.
And this is the thing that really upset me, was they didn't use consensus. The core team, which is probably less than 10 people, sat around a table and agreed. Okay, who wants to use Opportune? And they raised their hands. Okay, let's deploy it. It's like are you kidding me? And so right now they're fighting. Right now there's a fight in Bitcoin about this whole Opportune. The ability. They're called ordinals, by the way.
Yeah.
That's what ordinals are, basically data. That's the terminology they use, ordinals. And now ordinals, you can put ordinals data on the Bitcoin blockchain. And I think this is ridiculous. To me, this is kind of a crack, if you will, in Bitcoin, crack in the whole governance model. I was shocked when I heard about this, because I thought, well, they can't do that.
Yeah.
And oh yeah, they can, and they did. And so now if they don't reverse it, they need to somehow reverse it.
Yeah.
I don't know how. Basically, the core team has way too much power right now, way too much power, and somehow that's got to get reversed. I don't know how they're going to do it, but they got to change it and make it so that this never happens again. If they do that, I'll become bullish on Bitcoin again. But right now, I'm at a certain point, I'm going to sell half my Bitcoin. I don't know when, but I'm planning to, because of this. Mm-hmm. I'm selling it earlier than I thought I would, because of the Taproot problem, and the other one, the governance problem. And then the other one is the supply demand thing. I mean, the only way that Bitcoin goes higher is you have basically more demand. And at a certain point, I think that kind of starts to break down. At a certain point, people, let's spend our Bitcoin kind of thing. I don't know. And so that's why I like the L1s better, because the L1s, you're betting on technology. Like you said, it's all about use case.
Right.
And if the future is crypto, then these L1s are going to thrive. That's the way I look at it. One final thing on these L1s. I'm worried that a big corporation, because so far no corporations got involved in crypto. So I'm worried that a corporation is going to come in like Amazon and Apple and create an L1 and just rug pull me, because you won't get any value, because you have to own Amazon stock, right? Mm-hmm. If they invent their own, you're screwed. Google, Amazon, Microsoft, one of those three comes out with an L1, we're screwed. We're investing in all these long shot projects, right?
Yeah.
And they'll all go under if, especially if Amazon or Google does it. And the problem is that you can create an L1 tomorrow if you want. It's easy. So, I mean, SUI didn't even exist 2 years ago.
Right. Yeah. Yeah. And so I got to ask, where are you at with XRP, Don? You've obviously looked over these cryptos, but you skipped over XRP. Where are you at with that one?
So I almost bought XRP when it was at 15 cents. It was in 2017.
Mhm.
And I did my research and I was really upset with how the founders created XRP
Mhm.
and how they controlled the tokens.
Right.
And I couldn't buy it. I'm like, those guys basically just enriched themselves and just basically printed all these tokens and just took ownership. I just thought it was very sketchy but I've always known it was going to work and it was going to be successful. I probably should have bought it at 15 cents. Maybe it was my biggest mistake ever. I should have said, this is business done. So what if they say that Bill Gates basically stole, Microsoft, right? You heard those stories, right?
Yep.
The
Yep.
OS.
Yep.
But I was, people still buying Microsoft stock. So what if he stole the OS? So I probably should have bought it at 15 cents in hindsight,
Mhm.
but I'm not going to be an XRP investor. I didn't do it then, so I'm not going to do it now. But it doesn't have its origination, I think, is ugly in my opinion.
Yeah.
People disagree with me, by the way, but when I was there at the beginning. I watched it unfold, and I wasn't happy.
Yeah. Yeah. Yeah, I mean, the only pushback I'll say it's definitely matured, over that time. In 2017, they created that escrow, the time lock release, and there's no doubt about the Ripple does have the biggest holding of XRP, and they have a lot of sway, obviously, when you control that much of a supply of an asset. But for me, I think that they have been that corporate that you talk about that has come in and built real infrastructure, real utility. And I've always been fascinated by them being an outlier that actually has gotten institutions and corporates and other businesses to the table. And then for me, XRP's use as a bridge currency, like you said, Amazon, JP Morgan coin, they can all issue their own token, but you have essentially walled gardens unless you have an ability to trust each other. And so I think, like you said, if you get layer ones that these corporates and these banks tokenize on top of, owning that layer one is going to be probably the best spot to capitalize on that, right? Amazon coin and the bridge between Amazon coin and the US dollar. I think XRP can play that role. It's just a matter of getting those banks, institutions, and tokenization efforts to the XRP ledger. Where we've been behind is on the smart contract programmability. Like you said, on these other chains, they've been, Ethereum has a big lead in that regard. We can't deny that. But I've been saying, on my channel that we're about to see XRP DeFi finally come out with the lending protocol that's in the pipeline right now. We finally just got AMM liquidity pools. And so it's fascinating, I appreciate, that you're here in the crypto space. You've been here actually for quite some time. And for me, like I said, when we first started talking about crypto, balancing, right, between these defensive measures, real world assets, and then, whether it be investing in cryptos to generate and go buy those hard assets, or whether it be the mining stocks that you know so well to go buy more of the hard assets. I think it's an incredible opportunity, either way. And it's going to be a fascinating space to watch over the next decade. Like you said, this is not a quick play for me in that asset class either. But Don, I wanted to just plug in where folks can find you at. We've appreciated the time that you've spent with us here today, and I'm sure that we could go another hour or two with ease. You're obviously a wealth of knowledge. You run goldstockdata.com. You have a Substack, and you also have a Seeking Alpha page as well. We'll get those linked up down below. And I'm also going to tie in your Twitter account. Any final thoughts and anything else that you'd like to mention before we get out of here?
Yeah, a couple of things. First of all, there's huge opportunity in XRP for DeFi. Whoever, right now, there really isn't a dominant player in DeFi. And so that I think that's absolutely huge for XRP because they have a brand. So if they can get that brand, more instilled, if you will, because that's all it's going to take. If they can create a brand and then get people comfortable, um, you know, using DeFi and their trust is trustworthy, I think that it could be absolutely huge for them. The other thing is beautiful about it is XRP is known. Their original scope was in banking. That's where they started, right? Well, DeFi is banking, private banking. So I think that's a huge opportunity for XRP. The one thing that we didn't talk about, we started, I was writing down notes, is are we early, in this bull market? How much longer is it going to go? And I think we're not early. You really wanted to get into this in October of 23 or February of 24. Those were kind of the last times to be early, if you will. That's when the HUI was at 200, and now we're at today 869. So we went a long way. So we're not you're not early. Now the question is, are you late? I think that the tricky part now is getting in. If you get in now, you're basically you need to buy some band-aids because you're going to be catching some falling knives because of the volatility. It's almost impossible to buy the bottom, if you will. Very difficult. But from this point forward, I think that minimum from this point forward, you're going to get a three bagger. I believe, even if you buy the high quality names, if you just bought GDX, which is the high quality gold producers, you're probably going to get a three bagger. And then I think a four or five bagger is definitely doable here, depending on how high gold price. But if gold goes to 7,000, like I think it will, I think that's the kind of returns we're looking at. Three, I think, is easy. Four and five is doable. And then the outliers like six and seven, if you're really aggressive on juniors. So you're not early per se, but you're not late either, because there's still, I said, three to a seven bagger still left in the game here. I think if you go to $7,000, but the problem is entry. It's difficult, right? Because you're trying to enter in a volatile market. Really, really difficult. You might want a dollar cost average. You might want to buy more during the corrections. I think that there's going to be probably four more corrections this year, and I think we're going to have a couple deep ones. And so you dollar cost average, but you save some powder for the deep ones, to get more in. But there's definitely some money to be made here if gold goes to 7,000. And if gold goes to 7,000, silver's coming along. I think silver easily gets to 200 if gold goes to 7,000, and it could go higher than that. But when I do the math on the miners at 7,000 and $200 gold, they have a long way to run. But thanks for having me on, Zach. I enjoyed it.
Yeah, and I just want to say, if folks are looking to get, some more picks from you, get more analysis on the commodity sector. Obviously, I cover gold and silver more at the higher level, but this is why I'm having this conversation with you today, is because I'm looking over these equity plays as a way to leverage and then bring it back to those hard assets, right? This is our objective, whether it's investing in the cryptos or the equities over here. And so, what can you just give us a quick pitch, real quick? What all can folks learn on your platforms like goldstackdata.com and other subscriptions that you have available?
Yeah, I'll just talk about my book and my website.
Okay.
So if you already own gold and silver mining stocks, you want to add some more, then my website's really good for that, for finding additional stocks. If you don't own any gold and silver miner stocks, you don't want to start with my website. You want to start with my book.
Okay.
The 12th edition of my book is out. And the audio version, the first audio version will be out in about a week. But Amazon, the paperback and the digital are available. But the book is very thorough. It's 300 pages long. It's dense. It's got a lot of information, and you will learn about gold and silver mining stocks.
Mhm.
So start with the book if you don't own any, and then the website's really good for finding additional stocks. But thanks for letting me talk about it, Zach.
Absolutely, Don. And I hope that I can get you back here soon so we can get more of those insights as well too. This has been an incredible interview, and I thank you for your time, sir.
Thanks, Zach. It was great.
All right, everybody on the way out, if you could help us out by liking this video, sharing it out far and wide, go check out Don. I'm going to have all of his links down below, and we greatly appreciate you guys for stopping by today. Thank you, everybody. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.